Hey, good morning, good morning. Bitcoin. So we're going to do this in under 5 minutes, and we'll be here every Monday, Wednesday, and Friday, about an hour after the daily open, just so we get a little bit of price action to work with. Now, weekly open. So, how are we doing? How are we doing? It's good to connect with you all again. Um, First thing that I'm looking at on this chart, which I don't particularly like, is the previous weekly candle close. So we took out the previous weekly high, closed bearish, dropped this morning, took out last week's low. So we'll label that bang in there, right? Which is going to be a bit clearer when we drop it to the 5 minute. But there's last week's low. Weekly open. Let's drop to the daily. Actually, hold on for a second. Where are we? And what's the context of what's going on with price? Well, look, we took out the low there, bounced. We have a range, which is, where would it be? It's there, isn't it? It's there. No, do you know what? I'm going to bring this in. Here's the range. We'll use the range, the box, which is roughly there. Let me just change this. There. Oh, she's gone. Where's she gone? Range. Let's bring her up. Days, weeks. There we go. Now, um, where's the lower the range? It's probably in. You're trying to get as many touches. That's there, isn't it? There it is. So there's the range. Range high, range low. Support, resistance, support. It's still within, right? It's a big old range, but you need some boundaries, and I think that's what we have there. So let me just tighten this up. There we are. And we can go there. Okay, so we're still within the range. Break the range low, and all it is a support level. Support, support. Okay, just a support level, just a level of resistance. But it allows us to isolate price, and then it gives us a better idea of where we are in the context of things. So if we're going to take positions, shorts or longs, we know where the potential targets could be. We know where invalidations are. If we break lows, for example, we lose here for the fourth or fifth time, we know that it's problematic, and we're probably going to start looking for liquidity lower. Now, um, let's come back to the weekly open. So, daily, let's drop to 12 hour. Okay, weekly open. Weekly open. Where are you? She is there. Okay, so you can see what happened. Very clean. Weekly open. Swept this previous weekly low um, in there, and there is the SR. So we pushed up, got back inside, we've pushed lower now. Now, how would I play this? So just looking at um, current price action. Last week's high here. So let's give ourselves a mid-range to work with. Last week's high, last week's low. There, there. Okay. M30. Now, um, mid-range. Where is she? There. Because we may pull back to the mid-range there. And let me explain why. Because shorts are quite aggressive at the moment. So if we just label this level, mark this level up, shorts are very aggressive at these lows. I've noticed this morning. Um, or rather here, grey. What we have is if we come to high block, you can see I'll just use it as a factor of confluence. It's not actionable. It's a factor of about six I use. Total short liquidation is 290, so there's 290 shorts this side, 134 this side, longs. Delta is 6 billion red, so it's quite one-sided. Almost, just a little bit more than two to one. For every two shorts, there's one long, which suggests, well, and I mean, you look at the price action, the confluence is we've just swept out a previous weekly low. early on. We're back above the weekly open. We created a spike. A low is tends to be where people tend to short lows. They tend to long highs, right? That's the way the market functions. It's the majority gets on the wrong side of the market. So, in terms of where we are currently, when you look at metrics like high block, it's potential that there's room for a long this morning or today, right? Okay, something like that, bang, straight into the mid range, which is here. And you can see this was an important level. Resistance held around it, support, bang, broke below it. Now we have highs, daily highs. So it's three daily highs. Now let me show you what's important here. We have an equal high. Let's get it. Let's clean this up. Bring us. There we are. Nice wide range. With an equal high here. Mhm. So that equal high, big shelf of liquidity, which is um, a Saturday high. Uh, no, sorry, Friday high, Sunday high. See that there? Friday high, Sunday high, dropped. Now, if we're going to get, I mean, what I would like to see, I'd like to see a divergence on the CVD. So I'm not going to show you how you use this now, but I'll show you on the next stream. And ideally, what I want to see is um, we know longs have stepped in early, for sure. Of course they have. They're in now, right? Is the low going to hold? I like to see traders taken out before I get in. So if it drops, spikes them out once more, then we get back inside. Aggressive entry is back inside last week's range. Conservative entry is back above weekly open, and the target is going to be into there. Reversing this entire move, squeezing these highs. You've got um, equal highs in here. You've got previous week's mid-range in there and key SR. Maybe it'll push up as high as this, which would be this level of SR in here where it's anchored. But for the moment, I don't think shorts are. I think shorts are probably not the best play. I think it's better to wait, see if we take out the low today, squeeze it up on Monday. Maybe we place a higher the week, and then we can short it lower. Thanks for joining. Goodbye.